This is a quick video to go over the basics of how to read candlestick charts, patterns. And the reason we want to use candlesticks over other different types of charts. And that reason is price action. A candlestick can give us the price action that happened, whereas line charts and other types of charts can't give that to us. All right. So over here on this first red candle, we've got the high up here and the low down here. That's the same for all types of candles. However, on a red or bearish candle, the opening price is at the top of the body and the closing price is at the bottom of the body. So when this candle started forming, it opened right here at the top of the body, came up here, found sellers, came back down, got below the opening price, came way down here to the low, found some buyers or some sales closed, and it moved back up a little bit and closed right here. And that was the end of that candle for that time frame. Go over here to this green candle. The opening price is opposite of the red candle. It is at the bottom of the body. Closing price is at the top. Concepts are the same, highs and lows. This candle opened here, came down, found some buyers, moved back up above opening price, came all the way up here, found some sellers, came back down to the closing price and closed here. So that's your basics on bearish and bullish candles, bearish being red, bullish being green. Let's go over here to a doji candlestick. This would be where price opened here and it came up, came back down to where it opened, then all the way down here, and then moved back up to where it opened. So it opened and closed at the same price. However, it tried going up and failed, tried going down and failed. So that's really a strong sign of indecision, especially when it comes to higher time frame candles. It's a sign that in theory, we don't know if buyers or sellers are in control because price failed to go both ways. All right, let's look at hammer candles. Here on the green hammer, price opened here, came way down, found buyers, got back up above the open and closed above the open. Now, it's the same on the red or green. In both cases, a hammer candlestick would be considered bullish, and that would be because it tried to sell, but it failed and actually ended up closing above where it opened. On the opposite of a hammer is an inverted hammer where it's bearish. It opened up, tried to go up and continue upward, but failed, came back down below the open and closed. Those are the main basic candlesticks you would need to know. Let's just go over a couple real world examples. All right. So this green candle opened here at 3:30.05, came all the way up to 3:52.04, but then at the end of the day, it closed at 3:50.18. Okay. This small red candle here, it opened 3:36.69, came all the way down to 3:32.75, closed at 3:33.37. And I did forget to mention the high in there. At one point, it did get above and continued down. Okay. Here's a candle that opened and closed in the same spot, tried to come down, but failed to come down, only to go all the way back up to where it opened at. That's going to be the basics for candlesticks. I will see you in the next one.